Welcome back to Alpha Recap, the quick, smart wrap of the trading day from stockalpha.ai. Today we are breaking down a pretty busy tape. Materials and AI led the winners while policy and governance headlines dented some deeply policy-sensitive pockets. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everyone, great to be here. Markets closed up and down in all the usual interesting ways today. Concentrated leadership, lots of cross-sector linkages, and a reminder that policy still moves prices. Let's jump in.
Okay, big picture first. Materials and mining did the heavy lifting. Rio Tinto reported stronger copper output, and there was a flurry of funded drilling and M&A in the small-cap resource world. Copper names broadly posted low single-digit to mid-single-digit gains as buyers priced in better project pipelines.
Right. Copper is basically the industry's thermometer for electrification. Any signal of tighter supply or faster production feeds the idea that more capital will flow into clean energy and electric vehicle supply chains. And investors paid up for that today.
And it wasn't just copper. There were funded deals in uranium and rare earths too, which links directly to renewables, nuclear backstops, and everything that needs specialty materials.
Exactly. Those are the kinds of headlines that move project economics. Funded drill programs, reduced discovery risk, and that showed up as positive momentum across mining names.
Switching gears to tech. Central theme. OpenAI was reported to be lining up a major funding round, and Apple rumors about AI features kept investors focused on monetization for models and chips. And remember, Micron made a $1.8 billion purchase in Taiwan. That was a tangible capital spending story.
That Micron move mattered because it underscored memory and capacity commitments tied to AI workloads. When chip and memory supply gets bolstered, it supports the whole semi-ecosystem. Equipment makers, cloud providers, even data center REITs. Because compute demand was the story on traders' minds.
Let me be the person in the room who asks, what does OpenAI fundraising actually change for investors? It sounds abstract, but it seemed to move ad tech and cloud names today.
Good question. At a high level, money into those models means more productization. Think features that advertisers can buy against, enterprise hosting deals, and wider deployment inside apps. That cascades to companies selling cloud compute, chips, and the software layers that monetize user attention. So the funding narrative is really a push from research to revenue, which is what markets reward.
And that wasn't hypothetical. We saw strength across software, ad tech, and chip suppliers in the low single-digit range. Investors were pricing in that monetization runway.
Right. Now on energy, the standout was a long-duration storage proof. Noon Energy demonstrated a 100-plus hour storage run, which is a pretty big deal for grid planners and utilities.
Okay, explain that like I'm trying to convince my mom. Why is a 100-plus hour battery proof a headline?
Simple. Solar and wind can generate lots of energy, but they are intermittent. Short-duration batteries cover daily swings, but they don't handle multi-day cloudy stretches or seasonal imbalances. A credible 100-plus hour or multi-day storage solution gives grid operators a tool to smooth those gaps, reduces the need for fossil fuel backups, and improves the economics for big renewable projects. So it can change how projects are financed and which projects get built.
That's why renewables and storage names were leaders too. Europe's renewables had been beating fossil generation in 2025, and the storage demo added real project credibility. Developers and EPC contractors got a nice bump.
And those stories tie back to materials, right? More renewables and storage means more copper and rare earth demand. The cross-sector linkages are real. Supply chains and project finance start to look different when long-duration storage is plausible.
Now, let's talk about the other side of the tape. Policy and governance headlines knocked around cannabis, real estate, and parts of the banking complex.
Cannabis took a hit because hemp THC protections were removed from a spending bill, and there was a legal action in Florida tied to a campaign. That revived regulatory uncertainty and made investors nervous. The sector is uniquely sensitive to federal language, and that single rider can change capital access and valuations.
Investors literally priced in political risk there. So if you own cannabis names, you had to deal with headlines rather than fundamentals today.
On the real estate front, the tape was bifurcated. Industrial and multifamily leasing stayed strong, but office assets continued to lag and trade at discounts. Transaction activity was healthy overall, but people were picking and choosing where to allocate capital.
Yeah, higher quality industrial logistics and well-located residential assets were the safe harbor, while office remained the trickier trade. Banking news added another layer. Ally Financial's shift in capital allocation and a board shakeup at KeyCorp moved bank stocks independently of macro rates.
Those were stock-specific governance catalysts. Investors were reminded that dividend policies, buybacks, and board composition can re-rate a bank even if the broader rate or credit backdrop hasn't changed. That's why the advice was to treat governance as a separate risk factor.
Let's touch crypto because it had its own mini narrative. A midday rebound in Bitcoin and Ether tied to institutional interest and tokenization chatter pushed parts of that group higher.
Yes, BlackRock and ARK activity, plus ETF positioning and whale accumulation were part of that rebound. Institutional flows reduce the retail-only narrative and start tying crypto to broader capital markets. Custody, regulated infra, and tokenization rails benefited.
So, those were the big themes. Now for investors who asked us what to do next, material actions were recommended in the report. Could you summarize the actionable insights in plain language?
Sure, first, tilt into materials and selected miners, but be selective on jurisdiction and project quality. Favor names with funded development, recycling, or strong balance sheets. Second, rotate selectively into AI beneficiaries across the stack and cloud, chips, ad tech, and data center exposure. Third, consider renewables and long-duration storage with an emphasis on developers that have contracted offtake and bankable project cash flows.
And don't forget the defensive side of the ledger. Hedge or underweight cannabis until federal clarity came back. Treat bank governance stories as stock-specific catalysts and use tokenization and crypto infrastructure names for thematic exposure rather than speculation.
Right. Also stay selective in real estate. Overweight industrial and well-located multifamily, underweight office, and prefer REITs or developers with clear demand signals and financing access.
We should also call out risk checks that investors needed to watch in the near term.
Absolutely. Track the regulatory calendar closely for hemp riders, healthcare enforcement actions, and EU network rules. Watch Fed speakers and inflation data for the macro and rates picture, since that affects bank margins and REIT cap rates. Monitor commodity updates. Copper and rare earth supply can move materials names. And watch for any sudden corporate governance announcements that could re-rate bank and industrial stocks. Finally, pay attention to crypto regulatory signals from the SEC and international bodies.
We also had a short list of near-term catalysts to watch over the next 2 to 6 weeks. OpenAI partner and capital announcements, quarterly updates from major miners and chipmakers, renewable project financing rounds, Fed speakers, and any hemp or cannabis legislative language.
Those are the items that could reshuffle leadership quickly. The big theme is that secular stories, electrification metals, AI compute, and contracted renewables still matter, but headlines can create sharp short-term moves.
Quick to-do list for listeners who like concrete steps. If you want materials exposure, use diversified miners or a sector ETF to limit drill risk. For AI, balance broad funds with a couple of high-conviction names where you understand adoption timelines. For renewables, favor developers with contracted cash flows and experienced EPC partners.
And if you're active in banking or cannabis, monitor corporate filings and campaign disclosures closely. Those items will move stocks more than macro most days right now.
Let's wrap with 3 quick takeaways for listeners who prefer a bulleted summary.
1. Materials and miners led the day on stronger project news and copper supply signals. That trade tied directly to electrification demand. 2. AI funding and productization headlines kept tech and chip-related pockets in the winners column. Think software monetization, cloud, and memory. 3. Policy and governance headlines still bite. Cannabis, banks, and some real estate names were punished by legal and board news, proving regulation can reset risk premia fast.
Perfect. Final thought from me. The market closed with a clear split. Durable, secular demand stories are intact, but the near term is all about selectivity and managing regulatory risk.
That's the right framing. Be disciplined, watch the catalyst calendar, and focus on balance sheet quality and contracted cash flows where possible. And lean on active risk management. Headlines can flip sentiment quickly.
All right, folks, that's our recap. If you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly, and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening, and we'll see you next Market Wrap.